Good evening, everyone. This is Investor News Now, and this is your daily market wrap-up. Let's talk about what's shaking and stirring in the world of finance today. Spoiler alert, no major meltdowns, but we'll take a closer look just in case, right? First up, the Federal Reserve had their big January meeting and decided to leave interest rates untouched at a cozy 4.25% to 4.50%. Basically, the Fed said, we'll just chill for now and see what happens. Inflation is still hanging around like that one-party guest who won't leave, and the job market is just as hot as ever. Chair Jerome Powell spoke afterward, giving markets some clues about what's on their minds. And let me tell you, his every word is analyzed more than a reality TV breakup. Meanwhile, in the stock market, it's looking like investors are playing it cool today. U.S. stock futures didn't move much after a big rally yesterday. The Nasdaq popped 2%, with the S&P 500 and Dow riding the wave too. Now, all eyes are on the big tech players. Tesla, Microsoft, Meta. Their earnings are dropping after the bell, and you can bet Wall Street's got popcorn ready for that. If those numbers come out too low, there might be some screaming in the trading pits tomorrow. Now let's talk bonds. Yes, bonds. Those boring things that are suddenly very popular. Slowing inflation and higher yields are making bonds attractive again. The UK just auctioned off a bunch of 5-year gilts, and demand was through the roof. Who knew bonds could be trendy? Think of it this way. Bonds are like that reliable friend who shows up with snacks at your party. Steady, dependable, and always delivering. They're perfect for balancing out the wild ride that is the stock market. So what does all this mean for you savvy investors out there? Here are today's must-do moves. First, reassess your portfolio. Interest rates are holding steady, so maybe it's time to look at your interest rate-sensitive investments. Don't be afraid to shake things up a bit. Just like New Year's resolutions, portfolio goals can change. Second, bonds. With bond yields on the rise, adding some to your portfolio could be a smart move. Think of them as a steady paycheck without all the work. Who doesn't want that? Third, diversify. Keep your portfolio well-balanced across sectors. You don't want to be caught off guard if tech stocks decide to have a temper tantrum after tonight's earnings calls. Fourth, stay informed. Keep an ear out for economic news. When Powell speaks, markets listen, and so should you. So there you have it, folks. Markets are steady, bonds are the comeback kid, and tech earnings might be the popcorn-worthy drama of the day. Stay smart, stay diversified, and remember, when in doubt, bonds have your back. Thanks for tuning in to the Daily Market Wrap-Up with Investor News Now. We're signing off with one last piece of financial advice. Never bet against your grandma's savings advice. She probably knows what she's doing.